Very good afternoon. Let's get into the markets. Asian markets were largely up, with Japanese stocks jumping today. This followed news out of the United States that a trade deal had been struck between the US and Japan. While a debate may rage over the implications of the imposition of a 15% import duty, at least the uncertainty surrounding the issue has now gone. And the deal is said to have given others hope that more deals to come are likely to avoid a wider trade war. The Nikkei share average jumped by 3.51%. The Hang Seng Index rose by 1.62%, while the Shanghai Composite Index barely moved. That was up 0.01%. US markets closed mixed on Tuesday, with tech stocks dragging down the Nasdaq on the day, while the S&P 500 narrowly posted another fresh record high. Investors have been weighing the latest earnings results as well as the latest happenings around trade policy, with the big news coming out of the United States administration that the US and Japan have now sealed a trade deal, with the US imports at 15% coming from Japan and a promise by Japan to invest up to $550 billion in the US economy. Meanwhile, tech enthusiasts will be keeping an eye out for the first of the Magnificent Seven results set to come out later today, those being Google, that is the parent company, Alphabet and Tesla. The Dow Jones Industrial Average ended the session 0.4% in the black. The S&P 500 was up only slightly higher, gaining 0.06%, while the Nasdaq Composite Index declined by 0.4%. Looking at the local indicators, we see that the all-share index is up 0.9%. It's breached the psychological barrier of 100,000 points, now trading at 100,233 index points. The rand is trading at 17.54 against the US dollar, 20.56 vis-a-vis the euro, and 23.75 against the British pound. Looking at commodities, we see that gold is trading at $3,423 an ounce, edging up there. Platinum $1,453 per ounce, while Brent crude oil is trading at $68.09 a barrel. All right, let's get into conversation now with Victor Cani. He's a portfolio manager at Benguela Global Fund Managers. Thanks very much, Victor, for joining us. So President Donald Trump announced yesterday that the United States and China have sealed a trade deal, 15% import tariffs on Japan. And this seems to have been met positively on Asian markets, specifically on the Nikkei. But what are the economic implications for both countries?
Yeah, thank you, Nonku. I think it's a very positive outcome for Japan. It's de-escalated the trade war that they have with the US. It's a good compromise. Before this agreement, which took the tariff against Japan from 25 to 15%, it was expected that Japan's economy was going to fall into recession because the impact of the tariffs would have been about a negative 0.8% on GDP. However, given this change, it's expected that Japan's GDP will be positive going into 2026. So that's in Japan. In the US, it's a mix. So the positive aspect is that it's positive for inflation in the US. So there'll be less imported inflation as a result of tariffs, and so that improves the prospects of interest rate cuts, which Donald Trump really wants.
So
but it'll be negative.
Continue.
Yeah,
sorry.
Continue.
Yeah, I was going to say that. Pardon me, Victor.
Sorry.
I really apologize. Let's get into it. So the local currency has been strengthening nicely. And part of the reason that we're hearing for that, especially today, is the fact that the DA has decided to support the appropriations bill. Finally, we're going to have a proper, full legislated budget this afternoon, we hope, as they're voting. What do you think are the drivers of the stronger rand that we're experiencing right now?
We've been seeing quite a lot of positive economic data come out for South Africa. Manufacturing output was positive. Mining output improved in May, was up by 0.2% after a very weak April. There's also a general sentiment. We've seen our presidency of the G20 has improved investor sentiment towards us. After the rand weakened to almost 20 against the dollar in early April, We've seen more certainty come through in trade talks, so that's been positive for the rand. And our trade balance has also been helped by stronger commodity prices, platinum and gold prices. So those have been some of the positives behind the rand. And in general, emerging market currencies have been doing well against the dollar this year.
Yeah. So while the rand's been firming, there's talk that the oil price may rise. What's your reading of the oil market right now, and as it translates to the local economy?
I think perhaps the only source of a spike in the oil price this year, at least, will be geopolitical flare-ups. Other than that, the oil market is very well supplied. OPEC is planning to raise their share of global output significantly. It'll amount to about a 2% increase in total global oil output. And then non-OPEC countries are going to contribute another 1%. So you stack those two up, 3% increase in oil supply compared to what's expected to be about a 0.7% increase in oil demand. So demand is still very tepid. Supply is strong. So I'm expecting that the oil price will remain relatively weak, probably in the mid-60s for the rest of this year. That's positive for South Africans. If you combine that with our strong rand, I'd expect petrol and diesel prices locally to remain moderate for the rest of this year.
We'll quote you on that. And then I see that IBEX, formerly known as Steinhoff, sold their last stake, that is 28% of Pepkor. How did that impact on Pepkor, on the Pepkor share, which is a retailer, and how do you see its fundamentals in the retail space?
Yeah, it had a slight negative impact on the share price. I see the Pepkor shares down today. However, that sale was made for purposes purely relating to Steinhoff IBEX's own situation. It's now in its 8th year of its restructuring. It's using that money to clear debt. The fundamentals of Pepkor itself still remains intact and very strong. We know it's the market leader, it's the low price leader. It is the largest scale leader in South Africa as well, so it has a low cost advantage. Very important in this day and age where consumers are under pressure, so they provide the lowest prices in the market. So their competitive position is pretty well established. The only negative about the Pepkor story perhaps is the price that it's trading at the moment. In our view, it's trading at a full price, but still a very, very strong business.
Yeah, we're running out of time, but just very quickly, your reactions to the latest CPI number. It's up at 3%. Oh,
that's perhaps a slightly negative surprise. We were at 2.8% the month before. I think the SARB will still reduce interest rates, and probably that this will cause them to reflect a little further about their 3% inflation target revision. But it's not a bad number.
Yeah, and we'll quote you on that as well. Thank you so much, Victor, for your time and your insights there. That was Victor Cani. He's a portfolio manager at Benguela Global Fund Managers.